Hi, thanks for joining me on my market report. My name is Mike, and if you're new to my channel, my videos, well, we create these videos on mortgage rates and what's impacting them on a daily basis. We kind of like to get out there and inform you whether if it's something from the economic calendar or headline news or geopolitical, or sometimes a change in the sentiment with investors from maybe good news to now bad news to help you to those of you who are following mortgage rates to be able to gauge as to what's going on in the markets and help you make an informed decision whether if you're looking to refinance a purchase and want to lock in, or perhaps you're just in the industry and may want to just kind of know what's going on. And hopefully these videos will help you guys out in that context. A little bit about myself is I am a loan officer. I do work with the national lenders, so we certainly can help you out if you're looking to refinance or purchase. We do loans in all 50 states, so we're here. But not just that, we're here as a resource. So if you guys got questions about things, whether it's something about mortgage rates, mortgage programs available out there, or process or whatnot, please feel free to reach out. We're here to help you guys out and answer any questions you might have. Just post your questions in the contacts. We'll be there, or you can send me a message if you're looking for something offline, or if you need help with anything like rate quotes or anything else. We're here to help you guys out. Without further ado, we'll start off economic calendar. We just got one item here on the calendar, and that is the Chicago PMI for the month of January. This is manufacturing data around the Chicago region, and anything above 50 is considered expansion. So we have pretty good data here so far. So December was slightly improved. It went from 63.1 as the initial, and it improved to, they actually revised it to 64.3. Forecasters calling for a dip to 61.7. However, instead of dipping, it went upwards to 65.2, which is obviously very good. That we're seeing some good data for the month of January for manufacturing. Now, headline news, not much out there today. They're kind of just watching, of course, the Ukraine situation. That's been kind of more on the back burner, but we're getting the Q4, but they have been a bit disappointing for the most part. And of course, any effect from the Omicron. But the one biggest impact, of course, was the Fed. The concern that perhaps the Fed may raise rates too soon. Now, there was a Fed member earlier today that did kind of speak. I believe it was today or over the weekend. Made a comment to, I believe it was a journal, a journalist or something like that, where basically he thinks they could potentially have. He thinks it'll be maybe 3 rate hikes this year, where a lot of investors think there will be maybe 5 rate hikes there. But his 3 rate hikes include an increment of half a point. So instead of the quarter increments, he thinks they could be potentially a half a point each one. So it'll be a 1.5% on there. So again, that would be interesting if they raise increments. And of course, that was one of the concerns that investors had, is more what Powell did not say. He left it kind of open and kind of said that he basically wants that flexibility out there, which is reasonable because you don't know what's going to be coming out, especially with the Omicron or any other variants that might come out and potentially disrupt our markets. And they want to be prepared to adjust for anything. So, but unfortunately, investors are having a hard time dealing with that. So they want more specific lines as to what exactly is going to happen. If it could be quarter increments over 5 months, or now, of course, this is the first time they're hearing of it, that maybe they'll have a half a point for 3 rate hikes this year, or how this is going to work out. And of course, that is keeping that uncertainty is kind of not sitting well with investors for the most part. Now, what's going on today? Mortgage rates. Here we'll bring this out a little bit bigger for you to see. We did start off a little lower today, so a lot of lenders may have come in with worse pricing as a result. But now, as you can see with these lower, we're getting some reprice for the better. We're up 3 basis points from when we left off on Friday. So the pricing right now, it did start off a little worse, but however, it's improved. So the pricing will be more comparable to what we saw on Friday after the close. So for the most part, I would say pricing is unchanged from Friday's current at this current pace right now. And as you can see, the 25-year or 25 is just moving lower. So this will bring us a lot easier chance to reach the 25-day moving average approaching it. Now, we did get a lot of this improvement earlier today. And I'll kind of bring this out to about the same as the treasuries. What was going on earlier was that as soon as the treasuries hit between 7 and 8, we're in the 180 range between 7 and 8 o'clock. This is basically 7 to 8 o'clock. This is kind of when the markets changed. On the treasuries, investors started buying a bit of the treasuries in the 180 range. And as soon as that happened, it started bringing yields down lower. And that kind of helped us out for the most part, mortgage-backed securities. So mortgage-backed securities rose as a result of that. And as you can see here, currently we're just under 1.78 as a result now. So we're just that's helping improve mortgage rates a little bit and bring us back to the lower level here in this range that we got to on Friday. But unfortunately, today we started off higher again. And as soon as that happened, investors came in and started buying at the higher yields, and then help push yields lower down to just under 178 right now. And hopefully it'll keep that way. So mortgage rates again, to reiterate, currently are about unchanged from what we saw on Friday. Now we'll touch base on, lastly, we'll look at the average rate for conforming loans in the U.S. They do have points built in. So the 30-year is now at 3.69, and the 15-year is looking at 2.97 right now. So again, if you guys, these do have points in there. If you guys follow my videos, you'll know that these no one size fits all. If you guys want a price quote, please feel free to reach out. We can certainly accommodate that. Otherwise, hey, I hope you guys appreciate these videos. Hopefully these will help you guys out. If you guys like them, please help us out and smash that like button. We greatly appreciate your views and appreciate you guys, and share us. We greatly appreciate everything you guys do for us. In the meanwhile, if you guys got questions about anything else, please feel free to reach out. We are here to help accommodate and answer any questions you guys might help. Again, we're here to help you guys out. We thank you very much for your time, and we'll look forward to see you guys in tomorrow's video. Have a great rest of your day. Bye-bye.